Okay, imagine a stock, sort of like a phoenix, but maybe strapped to a rocket. That's what we saw with uniQure, ticker QURE. It just skyrocketed a massive 248% in a single day. So today we're doing a deep dive into our research on this, what really looks like one of the biggest biotech bombshells of the year. All based on data captured this morning, September 25th, 2025. Welcome to De-Risk, where we provide a no-nonsense analysis of stocks and jump straight into our deep dive.
And we are jumping in against a bit of a cautious market backdrop today. Futures for the S&P and NASDAQ pointing slightly lower. Plus, there's a whole fire hose of economic data coming. Jobless claims, GDP revisions, Fed speakers lined up. Could be a choppy session overall.
Yeah, that general hesitation really makes this uniQure story pop even more, doesn't it?
It really does. Stands out.
Okay, so let's unpack the catalyst here. uniQure, they're a gene therapy company, right? Focused on really tough rare diseases like Huntington's. And the drug causing all this excitement is AMT-130.
Exactly. And the news was, well, overwhelmingly positive results for AMT-130. We're talking data showing it slowed the progression of Huntington's disease by a truly jaw-dropping 75%.
75%, that's huge.
It is. And Wall Street reacted instantly, like almost overnight. 12 out of 13 analysts covering the stock slapped a buy or strong buy rating on it. A roaring endorsement, really.
What's fascinating, though, is the contrast. Just, days ago? Our research, our analysis suggested the stock was way overvalued. You know, the typical biotech story, burning through cash, development uncertainty. It actually had what analysts call a negative intrinsic value.
Right, and that's the classic biotech dilemma, isn't it? A negative intrinsic value basically means the market was pricing in a very high chance of failure, maybe, an 80 or 90% chance the drug just wouldn't pan out. These positive results, they don't just tweak the valuation, they force everyone to basically throw out the old math. The whole risk equation gets recalculated because the odds of success just fundamentally shifted.
Okay, so the science is compelling. But now let's get into the market mechanics, because that 248% surge wasn't just about the good news, there was pain involved. Before this news dropped, sentiment was actually pretty negative. There was massive short interest.
Massive is the word. Before the pop, 16.73% of the float, the available shares, were sold short. That's a big number. And crucially, the days to cover ratio was sitting at 8.
8 days. Explain that quickly for folks.
Sure. Days to cover tells you, based on average trading volume, how many days it would take for all the short sellers to buy back shares to close their positions. 8 days is, well, it's really high. It signals a tightly packed situation like a powder keg just waiting.
So the positive AMT-130 news was the match? Lit the fuse?
Exactly. Ignited this absolutely brutal short squeeze. Shorts had to scramble, buy back shares at any price, and that buying pressure just poured gasoline on the fire, fueled a huge chunk of that gain.
Did the options market back this up? Show that bullish rush?
Oh, absolutely. Tremendous optimism there. The put-to-call ratio plunged to 0.38.
Very low.
Extremely low. Means for every bet the stock will fall, a put option, there were almost 3 bets it would rise call options. That's, extreme confidence boiling over.
And technically, this wasn't some quiet drift higher. It was a stampede. Almost 70 million shares traded hands.
Wow.
That's a tsunami of capital, confirming the move, flipping the trend violently bullish basically overnight.
But, and this is an important but, that incredible speed, the sheer velocity of the move, has pushed the stock way into what we call overbought territory on technical charts. The fundamental story is powerful, no doubt, but purely from a momentum perspective, it's stretched thin. Very vulnerable to profit-taking or just a natural pullback because it ran so far so fast.
Okay, pulling it all together then. Transformative news, huge technical momentum, but also signs of exhaustion. What's the strategic outlook?
Our research led us to a verdict of, let's say, cautiously bullish. Right. The caution comes from those primary risks. It's technically stretched, like I mentioned. And the ultimate win still depends on future hurdles. We're talking FDA approval, a successful commercial launch down the line. Those are never guaranteed, no matter how good early data looks. That's the bigger picture reality check.
So where's the key battleground now? What levels should people watch in the next few sessions?
I'd watch the range between yesterday's close, around $47.50, and that intraday high it hit, $51.21. If the price can consolidate, sort of hold within that zone, it suggests some stability setting in after the explosion.
And the danger zone, where does the bullish case start to break down?
The critical level, the invalidation point for this immediate bullish momentum, would be a decisive break below yesterday's low of $37.12. If it slices through that, you'd have to say the technical momentum play, that short-term surge, is likely over.
So uniQure went from this, hopeful biotech story to maybe a potential heavyweight champion all in one day. The real question, the one you should be thinking about, is this the first round of a long title fight for market dominance? Or was this just a spectacular, stunning knockout punch that leaves the fighter, well, exhausted? That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you the next episode.